Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. Welcome back, John. What's coming up on the show today?
Well, Jim, we're going to follow up on topics from last week, which is the takeover bid for Azure Minerals and the XPLOR conference that took place this week in Montreal.
Why is Azure Minerals now trading 10% above SQM's $3.50 cash takeover bid?
Well, last week's Kaiser episode talked about the surprise offer that SQM had made for Azure Minerals that priced the Andover project in the West Pilbara area of Australia at effectively 2.4 billion Australian on a 100% basis. And this was stunning because until a year ago in October, market did not even know that Azure Minerals was looking at the pegmatite potential of its Andover project, which was primarily a nickel cobalt system play. And they started reporting drill results in June, and they were good results. And but they don't even have a maiden resource estimate yet. So to see within 1 year of announcing a field of outcropping pegmatites that are LCT type with decent grades at surface to have a $2.4 billion value. But the other stunning thing was that Gina Reinhardt of Hancock Prospecting, who messed up the Liontown takeover bid by Albemarle a month ago, she stepped in at $3.50 and bought 18.3% at that price. And everybody's wondering, well, why is she doing that? Is she going to bid more? Well, she hasn't yet. And on Wednesday, November 1st, the stock crept above the $3.50 price. And then Friday, last night's close in Australia, Chris Ellison's Mineral Resources did an initial substantial shareholder report showing that Mineral Resources and its subsidiaries now owned 12.3% of the issued stock. And a good chunk of that, of the 55.8 million shares, just under 20 million shares, was bought on Friday at an average price of $3.95. On a 100% basis, this assigns a $2.8 billion value to a pegmatite hard rock play that doesn't even have a resource estimate, but does have a substantial footprint that tells you this is going to be in that 100 to 200 million tons, somewhere between 1 and 1.5% lithium oxide basis. But this was also, what was especially surprising was this was a bad week for lithium and electric vehicles in general. The lithium carbonate price closed the week at $10.06, so it's ready to drop below $10 a pound. The media has been full of negative articles about how electric vehicle sales have stalled because people are looking at the higher interest rates for buying a car, and they're also concerned that these persistent high interest rates are going to stick around for a lot longer than is comfortable for the global economy. And yet at the same time, we see that Toyota announced that it is building a major battery plant in North Carolina. But other bad press was coming from, say, people like Robert Friedland, who was at the Northern Miners Canadian Mining Symposium in London on October 12 to 13. During his interview, he was actually quite optimistic about the future for lithium as part of the lithium-ion battery. In fact, he sees the solid-state lithium-ion battery to be a major part of that future. He's a private investor, or he's an investor in a private company called Pure Lithium, which has apparently developed an alternative to the kind of solid-state battery that Toyota has developed, but that also uses lithium metal in the anode. But this company has apparently also developed a direct lithium extraction technology where you can convert the lithium in the oil field brines directly into into lithium, very pure lithium metal to make these batteries. And he even managed to take a backhanded slap at the James Bay pegmatite plays by suggesting that was all virtue signaling. And he didn't quite say it, but the implication is that the cost per unit of lithium by direct lithium extraction, and a number of companies are claiming that, will be able to draw on an unlimited supply of lithium at a cost well below the $5 a pound lithium carbonate equivalent that we can expect to be required for the pegmatite lithium supply future. But SQM, Gina Reinhart and Chris Ellison, they either have not heard this news that DLE is going to destroy the lithium pegmatite future, or they do not believe that it will ever deliver a cost structure that will be significantly cheaper than what it takes to produce lithium from pegmatite at a profit. So the importance of this Chris Ellison's Mineral Resources stepping in and buying the last chunk of his stakes that puts him over that 10% needed to disclose that he's a significant shareholder at a $3.95 price. This is an indication that Mineral Resources sees the value in this, sees the 2030 and beyond future for lithium as especially strong. And of course, it's entirely consistent with Friedland saying that, yes, solid-state lithium-ion batteries are going to be part of the future. But Gina, SQM, and Chris, they're saying, well, maybe not from DLE, maybe it'll supply some of it, but the pegmatites are where you can see it's in the ground. You know what it's going to take to get it out, and that's where the future lies. And all we now need to see is Pilbara Minerals, the other Australian lithium heavyweight, to step into the fray to see what the final price will be that Azure Minerals will disappear at.
Any feedback about how the Quebec XPLOR conference went in Montreal this week?
The XPLOR conference started off with a bit of a blasé news release from Brunswick Exploration, which was trading strongly last week. We talked about that in the Kaiser Watch episode, and the company had early October predicted assays for its Mirage project in the second half of October. So here this was a Monday. But all we got was kind of a rehash of what we already knew at the beginning of the month. There was absolutely nothing new in the press release about how many more holes had been drilled. It mentioned that there were more outcrops that had been identified, but it didn't say whether those were within the existing corridor, simply next to each other. They peeled away some more moss and found more, or whether they widened or extended the corridor. And they announced that they were raising $5 million flow-through. Of that, $1 million was Quebec flow-through at $1.15, and $4 million was at the sort of the national flow-through at $1.10, roughly about 4.5 million shares. This will put their working capital at the end of the year into the $10 to $11 million range, and they predicted it would take until November 17th to close. And the market looked at this and said, well, they're not going to have any news until this financing closes. And also they didn't really report anything, even though they should have been able to at least give us better graphics and some indication about how the footprint was expanding. And especially given that one of the sort of themes at the XPLOR conference was that thanks to the loss of the summer boots on the ground season to the forest fire closures, were incremental news about spodumene boulders and or spodumene outcrop and channel samples and lengths and widths should have moved the market. The market seems to have leapfrogged this stage of the awakening of a great Canadian area play to now sort of saying, call me when you have a footprint of 1% plus lithium oxide indicate of at least 50 million tons. And that's kind of what we can see with Azure Minerals in Australia, and they've got enough drill holes in it to show that they understand that the dip of these systems, how many there are, and that it's just a matter of time to delivering that 100 to 200 million ton resource. But in the James Bay area, yes, we've got Allchem with over 100 million tons, world-class, with its Sear Galaxy project. And we've got Patriot Battery Metals with its 109 million ton resource, and still a lot more to come from that. By the way, Patriot Battery Metal did win the Prospector Discovery of the Year award, which is completely understandable. But the thing with Brunswick, when that news came out, the market started to worry. Maybe this isn't coming together. Maybe it doesn't. Maybe Mirage isn't that next big discovery. And yet, talking to people like Killian Charles, well, no, everything's progressing. They don't have any assays. They got an assay for one hole in the past week, but that's not enough to bother putting out. The assay labs are suddenly flooded with material. Turnaround is very slow. And so they weren't in a position to report that. So Killian admits that, yeah, maybe they should have put a little more effort into showing that progress is being made. I think it's a case where they don't understand how sensitive the North American audience is to being fed a continuous flow of information about how the James Bay, great Canadian James Bay lithium area play is evolving. In Australia, they understand that the Australian culture towards mining exploration is far more robust than it is in Canada. In Canada, in fact, we're undergoing what I call a collective capitulation with regard to investors and the resource junior sector. It is dying. I'm seeing companies, good management, ones with even money in the treasury, being indiscriminately sold. It's as if the whole Canadian market is saying goodbye to resource juniors. We're done. You suck. We're never coming back. And for me, this is great. It's a great big bottom fishing opportunity. The other metal prices aren't doing anything in particular, but the lithium story, if you do believe that solid state lithium ion batteries are going to be part of that 2030 and beyond future, and a substantial part, and you dismiss that DLE will totally eclipse everything with super cheap lithium supply, then you know pegmatites are going to be part of that. Canada is going to become a major supplier, and the James Bay jurisdiction is going to be a major source. In fact, during the conference, a private company called White Rock Lithium, which had staked the Greenstone Belt in the much more northern part, it's about, I think, 70 kilometers of north of where the Mirage project is, they put out a press release showing that they had found this substantial outcropping 800 by 600 meter pegmatite mountain, sticking 50 meters above the ground. In other words, if you climb it, with your Garmin, you'll record an elevation gain of 50 meters. And everybody says, well, big deal. So you got a pegmatite. They reported they had high grade lithium oxide values from it. But I was told in a personal comment that no, the spot you mean is all over this thing. This is a big monster. It's like a beached whale sticking out of the ground. And this company had staked it because the Greenstone Belt is the kind of place where you're going to find this. And when they put the boots on the ground, they literally land on this and start saying, wow, look at these spodumene crystals all over the place. So it's private, so it makes no difference to any of us right now in terms of investors. But it's another sign that there is so much left to be found. In this case, it was more remote, farther north, but it was sticking out of the ground. In other places, it's going to be more subtle. Now, in terms of the mood at the conference, I was told there were no brokers there whatsoever. There were fund managers. present, apparently not the flow-through type, which I find peculiar. There weren't that many companies exhibiting. There were apparently a fair number of Australian resource junior executives wandering around, checking out things. But it was largely a technical conference. People were quite upbeat about the future of the lithium, the James Bay lithium region, and the day with the lithium-related talks apparently was well attended. It might be like the equivalent of PDAC early 1983, March 1983. We'd had about 1 year of stuff happening in the Lac de Gras diamond play, and then there were all these short courses and presentations in March that Pat Sheehan had organized, and this was super well attended by technical people. Retail wasn't yet into it, but definitely retail is absent from this space, and but overall, the feedback I got was, service providers were present, investors were not very present, and the mood could have been better. But again, the backdrop is that of Canada's resource junior ecosystem dying, brokers retiring, industry executives retiring, walking away, a younger generation that thinks mining is bad, and should only be done elsewhere where the downstream victims have no way to protect themselves, so that we can have super cheap inputs for all our technology. Canada has a serious problem, and with this capitulation blowout that's happening for the end of the year, there's going to be a lot of cheap prices. Only a few companies will be in a position to drill in the new year. The next stage is to get back all the sampling that companies have done with the outcrops. A lot of them didn't have an XRF gun, so can't show us the low potassium rubidium ratios that tell you they have an LCT type pegmatite. There's a lot of pegmatite in the James Bay region, but the vast majority of it is barren, worthless, not LCT type. So the next round of hopefully enthusiasm will be when we start getting samples back that confirm, yes, this thing that looks so and so big, it has lithium in it. The spodumene has been confirmed. Many of the companies couldn't even talk about it being spodumene because the boots on the ground did not have a qualified professional there to be able to identify spodumene in the field. And a lot of these samples went directly to the lab without a qualified professional actually looking at them to see if this is indeed spodumene, the primary mineral for LCT type pegmatites. So we'll have to see what happens in the rest of the part of the year. We got 2 months left. And I think it's a great positioning period. There is a great antipathy emerging towards flow-through. It's been brutal with these flow-through funds. Just, all the investors are just there for the tax deferral or deductions. And have been ruthlessly blowing out this paper. Some of it came to an end on October 31st, when that was the deadline for figuring out how much is going to be distributed as cash and paper to the fund holders. But many companies, because they didn't get a chance to develop drill targets to drill in the first quarter, they don't have to raise money in December. So maybe these tax avoiders in Canada are going to be a little starved of an opportunity to do flow-through investments and then, 6 to 12 months later, destroy the markets in these companies as they just willy-nilly blow out their flow-through paper because they never ever cared about the fundamental outcome.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.